Well, good morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I am going to be your room moderator for the next hour and a half or so. The market's just opened. What you're looking at here, for those of you new to the trading room, is the diversified trading system. And it's diversified because we're looking at the market from three different points of view. Here in the top left corner, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And bottom right is the latest tool. It's the Raptor. The Raptor is, well, it combines elements of all three birds into one. On this monitor, I'm watching the NASDAQ. I'm also watching soybeans and crude oil, but I would be happy to take a look at any market which is of interest to you. We just had the opening bell, and I was trying to take advantage of that first signal this morning. Darn it. We'll take a look at that here in a moment. It looks like the market just running away on us a little bit, which it has been doing in the morning. It's been giving us these strong signals out of the gate. By the way, before I forget, if any of you want some information about some of the tools that you see here today, you can go to that link right there. Okay, but it is early, so I'll try not to panic. Here on the Hawk Scalper, actually before we do that, let's take a look at the overnight. A lot of times to get a feel for where the market has been, I'll start with my Falcon Swing Trader. And let's take a look at the overnight session. Here was the London Open right around here. We got a nice trend change signal out of the open. The trend change signal, fairly easy to identify. It occurs when our trend line changes color from green to red. We get this down move. That's the move that changes the trend line color. Then we get this up move, this counter trend move. That shows us the buyers trying to recover the market. And then the sellers come back and we get a sell signal. Now, all signals on DTS are produced the same way. They start with a warning dot and an audio signal. After that, they're followed by a triangle and a hash mark. That tells us that the signal is complete and ready to make a decision. So we got a sell signal here to the downside. Good follow through on that. The market started thrashing about a little bit. Our trend line turned into a roller coaster. Our filter was all awash. And then here out of the open, right out of the opening bell, we had a trend change signal to the upside. A little bit shorter version, a little bit quicker, but you see here's the move that changes the trend line color from red to green. Here's the down move, here's the up move, and there was our little run up. Now on the Falcon Swing Trader, I've also got these horizontal lines you see here. These are the ultimate support and resistance suite. You can actually put these on any chart, not just a DTS chart. But notice how well they work. The market bounced off of the primary support, rallied right up here to the median line, and now we're getting a trend change signal to the downside. In fact, we're getting a early trend change signal to the downside. So we're getting all kinds of signals here on the Falcon this morning. This down, up, down pattern. The early trend change signal occurs just as your trend line changes color. So we'll put that on the shelf. We'll see if we can't find a trade here. I think everybody and their brother is waiting for the NASDAQ to topple over. This is the overnight on the Eagle. And you can see we made a nice little progression here. No signal just yet on our trend trader, but I would not be surprised to see a sell signal. Notice how our trading band, which gives us our directional bias, is all over the place. Oh, these blue dots that you see on here, by the way, those are part of our stop trailing strategies. We have 16 different stop strategies to choose from, and each one is fully customizable. So we can find a stop strategy to our liking. All right, broke down on the trend line there that I drew. Here's the hawk scalper. A lot of yellow bar clusters through here. Remember, we were talking about that the other day. These yellow bars show us that the market is essentially in a sideways range. The easiest way to trade a sideways range is just, well, really to identify it. Identify it as a sideways range and leave it alone until we get outside of there. Getting a first micro-macro cross here to the downside. That is a very, very tempting signal. Right now we're actually a little bit, oop, there's the first micro-macro cross signal. I was looking somewhere else. The first micro-macro cross signal we know is a very high probability signal on the hawk, right? It's one of our high probability signals. So I'm going to try to set this up, maybe take it on a second push. Oh, see, now they're going to run away on me. All right. Well, what I was going to try to do is I was going to try to take it on the second push of the next bar. That's essentially, I'm letting the market engage the signal. So you see there's the warning dot, there's the triangle and hash mark. I wanted to take it here, but because it's the first micro-macro cross, because we're still in a sideways range, I probably would try to risk my trade way up there. And that would give me a chance, in case the market wasn't prepared to head lower yet, in case it was a pullback of sorts, I had my stop a little further back. But you see that worked out very well. Just hit our scalp target. Don't be surprised to see the market reverse from here now. It does that, tends to do that fairly regularly after hitting our high probability targets. And here our Falcon trend change signal also worked well to the downside. So this is very much like yesterday, where within the first half hour of trading, our day was done. We hit the market out of the open, caught a couple clean signals right out of the gate. Today would have been a comparable day. All right, let's take a look here at the Raptor. The Raptor, like I said, is the latest edition. It incorporates elements of the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader all into the one tool as the signal generation. So you can see here it has a similar band to what we were looking at on the Eagle. This is the band off of the Eagle. And our band has just turned bearish. And it looks like we're just about to get outside of this trading range that we were in. So the trading range, something like that. Now that we're outside of the trading range, I'm going to look for a retest. So the markets always tend to do this type of thing. When they break a support or resistance area, they're going to come back, they're going to retest it. Somewhere through here, we're going to generate a sell signal. You see, they tried to do it to the upside, but the signal didn't hold, right? It never bounced. That was telling you actually that it was safe to sell even these early signals if you wanted to be a little bit more aggressive on the market. But that's what I'm on the lookout for now, is for the retest and a chance to get back in. This tool here that you see on the Hawk, or pardon me, the Raptor, this is the all-new Geiger counter. It was actually just released this week. And the Geiger counter is a great tool. It's a momentum tool. It gives you a visual of the time and sales, so you can see who is actually in control of the market. And you can see right now our needle on the Geiger counter is turning red, which tells us that without a doubt the sellers have control of the market right now. So we'll be looking for selling opportunities, and I won't really trust too much on the rally side. All right, I heard a few more scalp signals. Our swing trader falling off nicely. Yes, the hazard of a room moderator. Sometimes you end up missing out on the signal because you're showing stuff. Today is crude inventory. Let's take a look at crude oil. What's going on there? So in about 45 minutes time, we should see the inventory release. And I can tell you right now, from the way that crude oil is moving sideways, the inventory report is probably going to have some say-so on the market's direction. There's no direction in crude oil right now. This is the overnight. Crude oil opened here, right here, around 6 a.m. Pacific time, and it hasn't done anything. Working on a possible trend change signal to the downside. See, our trend line has changed color here on the Falcon. So there's the down, here's the up. We'll see if they come back with a few more bars to the downside and a sell signal. But what tends to happen around inventory is exactly this. The market tends to go sideways, and I love it when it's trading right in the middle, because that enables us to bracket this trade, bracket this range, and trade it on a breakout either higher or lower. So we'll see if crude oil continues to do that. We might be able to take advantage of that. Oh my goodness, the market's still falling. Oh, they're not going to give me another chance to get in today. See, darn it. Oh well. Oh, there they go. Apparently Janet Yellen is speaking, and they're not liking very much what she has to say, apparently. Well, there's nothing we can do about it at the moment. We should get another opportunity here, though, as the day goes on. Yeah, like Joe says, baby, come back. For those of you old enough, come back, Shane. Shane, come back. Oh, well. Like I said, hazard of a room moderator. We knew from yesterday's session that today was going to be a big day. And, well, here, let me show you how else you can know. And Walter, I'm going to get to your question here in just a moment, because Walter is asking a good question. Yeah, this is definitely a four-figure day today, folks. All right, here is how you can tell the market was very likely to head lower today. This is a daily chart of the NASDAQ. There's nothing magical going on here. You just shoot a trend line across these lows. Oops, drew the trend line the wrong way. Let's do it this way. shooting it from down here. There we go. So there was a good chance the market was going to try to tail off a little bit. We even have a short-term trend line right here, which was right on yesterday's low. So very often it's helpful to have a little bit of a longer term perspective. But I'm afraid that might have been the move of the day, folks. We did get a retest, but it occurred very quickly. You see, it wasn't as pronounced as the retest here. This is what they normally look like. When you break out, you get this retest and you get this rally here. This was moving so fast. That was all the retests the market mustered. Came back with a couple of sell signals, actually. It's not like the hawk left us high and dry, but there she goes. There should be some sort of short-term profit taking going on, something to rally the market a little bit. Just going to have to wait. And look at this, our Geiger counter still full on red. Okay, Walter is asking, I'm new to futures and I have a small account. Any suggestions on how to start without losing all my money? Great question. Great question, Walter. Okay, first off, I'm going to shoot you guys an email address here. This is my email address. Oh, actually, I wonder if it's still on the Indicator Warehouse site. Hold on one second here. Okay, I can't find, I was just going to send you to the link so that you could get the beginner guide or beginner trading manual for futures that I wrote. So you can email me directly. I'll send it along to you. All right, so if anybody's interested in that, it's an overview primarily for futures traders. If you're brand new to the futures market, it helps you with things like valuation and knowing the difference between going long and short, and it's really written for the beginner. So anybody's welcome to it. If you'd like to read it, then by all means. And Sam, yes, I will be covering the purpose and function of the various birds. Let me just finish with Walter's question here. So Walter asked, any suggestions on how to start trading without losing all my money? Okay, first off, I would encourage you to concentrate on a lower tick value instrument like the NASDAQ or the mini Dow. These are $5 a tick instruments. So it's an easy way to wade into the trading arena without jumping right off into the deep end and trying to trade something like the E-mini or the Russell or crude oil, all of which have higher tick values, all of which make larger moves. The next thing you need to do is you need to be very serious about controlling your risk, even if it means missing out on a move. Now, this tool that I have right here on the right-hand side is called the Trade Manager. This is an insanely powerful tool. For those of you who have been in the room with me before, this is going to be a little bit redundant, but I cannot stress how important this tool is to your trading success. Now, you can simulate the effects of this tool, but whether you do it manually or whether you have the Trade Manager do it for you, here is the most important part of your trading, right here, keeping your risk exposure constant. Now, Walter, with a small account, you're going to end up risking more than the average trader. But as a rule of thumb, you don't want to risk more than 5% of your trading capital. Ideally, 2% is the ideal. But like I said, with a smaller account, you're probably going to end up risking 3 or 4% on a trade, maybe even 5%, just so that you are able to put a trade on. But larger account traders have the luxury they can risk less. I've shared with you how I worked with a fellow who had a $300,000 trading account. We were only risking 0.25% of his capital because he didn't have to risk any more than that. But here's the important thing. Most people, when they start trading, they say, "Oh, I'm going to be a very conservative trader. Okay, here's my signal. I'm going to enter here. I'm going to cover here, right? I'm only going to risk 60 bucks." Yeah, okay. Market brings you in. Market stops you out. So you lose $60. What should you do? What you should do is you should be risking a certain percentage of your account all the time. So here's your signal. Now watch what happens. If I risk, and this is only demonstration, if I risk my trade here, I'm risking $400. Now before you fall off your chair, Walter, remember this is my account. This is 2% of my trading capital, but watch what happens. I'm risking $400 framing the trade like that. What if I choose to risk the trade all the way up here? Oops, okay, I went a little bit too far. If I choose to risk the trade up here, oh, look, I'm still risking about $400. My risk exposure has not changed. My risk remains the same. What has changed is the quantity that I trade. So here I can only afford to trade one contract. Here I can afford to trade, 4 contracts. But the risk exposure always stays the same. Now, chances are, Walter, you're only going to be able to afford one contract at a time anyhow. But the point I'm trying to make is don't strangle your trade. Don't frame your trade really tight, hoping that's going to minimize your risk exposure. It's not. All you're going to do is you're going to frame your trade so tight that you get stopped out before you have a chance to make a reasonable or any profit. A misconception about trading is that you're supposed to make 3 times what you have at risk, right? So you're supposed to look at your chart and you're supposed to say, oh, okay, hey, the market's going to go up here now, right? The market's got to come back here. So I'm going to do my risk-reward ratio. I'm going to go, I'm going to risk this much and I'm going to make this much profit. Yeah, sure. Really? The only part of this trading equation, this is why risk-reward ratios don't work. The only part of this trade equation that you know is this part right here, the risk side, right? This is the only part of the trading equation you have any control over. You have no control over this side. If you did, you would not be in this trading room with me. If you knew that the market was going to retrace to 44.18, you would not be here. The fact of the matter is nobody knows where the market is going next. That's why we rely on probabilities. So here again is our first micro-macro cross signal, high probability signal. I would look at taking a high probability signal, but where am I going to risk it? Am I going to strangle the trade and put it here? No. Ideally, I'm going to risk it at least above these swing highs, and my profit target's somewhere down here. Okay, so it's only a single contract. Maybe I'll put it on as a runner, but the point is I get to give this trade a chance. I'm not going to get stopped out before I get a chance to realize a profit. Very important lesson to learn. Very important lesson. Until you learn that lesson, it's going to be very difficult to make money. So only risk a certain percentage of your trading account. The other thing that you should do is you should take profit on target. If you're scalping, a high probability target is $50 per contract. So that's, in a market like the NASDAQ, that's 10 ticks. Now, if you're thinking, oh, well, you know, $50, I can't make a living on $50. No, you can't. But the key component is that as your account grows, you can take more contracts. Trading a small account, your first priority should be building your account. Build it up to where you have $20,000 or $25,000 trading capital. Now you can use some serious leverage. Here's another misconception about trading, folks. Most people think that in order to be a successful trader, they need to take a lot of trades. I had one fellow come to me, he said, I want to be a scalper, I want you to show me how I can take 100 trades a day. I said to him, you will never make money trading, you will never be a successful trader trading 100 times a day. He never came back. I could have shown him how to do it. I can tell you right now how to do it. You watch a 30-second chart. You'll be so strung out on coffee and nicotine that you'll probably have a heart attack in the next year, but that's how you can generate 100 signals a day. That is not the key to trading. You want to know the key to being a successful trader? You want to know how the guys on Wall Street do it? They trade size. So even in a trade like this with the NASDAQ, here's our first micro-macro cross signal that we were trying to take. Okay, so I can get in and out a trade like that. I can make $50. Big deal, right? All right, well, what if I'm trading a larger account and I can take, well, first off, let me say, okay, $50. You do this twice a day. Just take two $50 trades a day. Not a big deal. We could be done already, right? We had our first micro-macro cross signal here off of the open bell, right there. So there's one $50 target. Hooray. A few minutes later, we had another one. Hooray. If we were quick enough, we could have said, okay, I'll try this retest here. Hooray, 3 trades. But let's say we just take two $50 trades a day. Do you know how much that is at the end of the year? Trading a single contract, that is $20,000. $20,000 taking two $50 trades a day. That's it. Okay, what if you started trading 3 contracts? Now all of a sudden you've made $60,000 a year. That's not chasing the market. That's not wondering about every single signal. Oh, should I take this one? Should I take that one? That is how professional traders trade. They trade size. They find themselves a high probability signal, a signal that they have good chance is going to work out. And this first micro-macro cross signal is a very high probability signal. It works out like about 85% of the time. So that's why it's a signal that I'll take almost without exception. Same thing here on the Falcon when I get a trend change signal. I know it's a high probability signal. Here was our trend change signal. And exceptional result on this one. But even this one here to the upside was enough to hit my profit objective. So I hate to burst your bubble. If you're somebody who's looking to be a high frequency trader, you don't need to. You just need to get in there with some size. So I hope I didn't beat that point to death, but those would be my first 2 tips for you, Walter. Take profit when you have it, and really control your risk exposure, because that's going to keep you from blowing yourself up. And keep a trading journal. That's the other thing. Write down your trades. And not just the profit and loss, but write down the reasons for taking your trades. Oh no, Michelle just said that our end of day trade, did it really, Michelle, did it really gap our opening range? Oh no. I was hoping the NASDAQ would behave this morning. Okay, so Sam's asking about the function of the various birds. Let's take a look here at the Hawk Scalper. So obviously the Hawk Scalper has been programmed to pick up on scalp signals. The signals all generate with warning dots, audio alerts, triangle, hash marks. You can see we're getting a lot of yellow bars through here. The bars will paint given on what's going on in the market. Yellow bars in the Hawk are too neutral. They show a neutral market. So with the Hawk, as with most of the other tools, we're looking really for confluence. We're looking for a signal that prints where the bar color, the trend lines, the filter, everything is the same. So here's a signal that printed, everything is red, market falls off, hits our high probability target, starts going a little bit sideways. You see these other signals that are printing, things are out of sync. Bar color is out of sync, filter is out of sync, trend lines are out of sync. So the Hawk is your short-term scalping tool. The DTS system was developed from the premise that there are different market environments. You know, we've all had these days, like today, everybody's going to be running around, hooray, hooray, you know, I had a good day. When the market is trending, it's easy to make money. I forget who said it. It might have been Ed Sequoia who said, everybody's a genius in a bull market, right? Because it's easy. Everybody can make money in a bull market. Oh, shoot, here was just another first micro-macro cross signal. Again, another high probability signal, and it looks like we just got down to our profit objective on that one. Yep, just hit our profit target again. So with the Hawk, as with the other tools, we do have high probability signals that we look for. You're going to wonder, you're going to say, well, there's an awful lot of arrows and stuff going on here. We don't necessarily want to take them all. These are the trades that we're going to focus on. These are the high probability setups. And so we're going to look at things like first micro-macro crosses, macro pullbacks, 4-arrow consolidations, post 4-arrow consolidations, which coincidentally also developed to be a macro pullback, and red bar buys or green bar sells. So these are the primary signals that we're looking for on our Hawk. And we have comparable signals that we trade for our Falcon and Eagle as well. All right, so the Hawk is designed to pick up on short-term scalps. Oh, what I was going to say is that we've all had these days where, you know, your trading works, everything is wonderful, and then the next day you go back and your signal doesn't work. What's changed? Well, your signal hasn't changed, has it? No. What's changed is the environment, the market condition has changed. So if you're trying to use the same tool all the time, it's like my grandfather used to say, if the only tool you have is a hammer, then you tend to see every problem as a nail. Well, DTS gives you 3 different hammers, right? So if it's a nail, you have a hammer. If it's a screw, you have a screwdriver and whatever. you get, if it's a bolt, you have a wrench. All right, so there you go. You have different tools for whatever the environment is. So the Hawk is our scalping tool. The Falcon is our swing trading tool. It's been designed to pick up mid-range price swings. And you can see that we had one here out of the open. Pretty sure that one hit our high probability target also, so we would have set it up something like that. Hit our high probability target, came back with yet another trend change signal to the downside. Hit our high probability target there. I should have had a runner on today, but even if I didn't, it would still have been a very nice day, and now we're kind of hitting the skids. The signals on the Falcon, very similar to the Hawk, where we're looking for confluence. We're looking for the trend line, bar colors, signal, filter, everything to be in sync. Those are our highest probability signals. And you can see today, exceptional follow through. Now, our trend line is a wash. It's back and forth. It's looking like a roller coaster. Our filter is a mess. So it's fairly obvious the market is in a bit of sideways range again. So at the moment, we don't have a tradable signal. Thank you, James. James gave me the link here to the let's see if I can pull that up for you. So we're just waiting now. And it should be fairly obvious that the market is going sideways. All right, well, here's the link to that. Oops, let's try this. Oops, sorry, folks, wrong link. But you can go to that one too. That one will take you to the website. There you go. There's that link to that little beginner trading manual. Okay, and now we've got the Eagle Trend Trader. And this tool has been designed to pick up on trending environments. So you can see that through here there was very little trend. So our trading band, our bar colors, everything, our filter, it's all a mess. So that tells me quite plainly there's no real trend going on. And now we broke down the market. You can see tried to signal here, but it was just moving too fast. It was trying to recover a little bit, would have produced a with trend signal somewhere around here. This is very rare, by the way. The market doesn't normally run away on us like this. Oh, we just had a with trend signal here. What was I doing that I missed that? So here was our with trend signal. So we get our warning dots. Coming out of this trading band, we get the warning dot triangle hash mark. I've been using this ATR line as a filter recently. This is a little hint from Mike Filigera from our stock trading room. And it looks as though, oh yes, a nice progression. Oh, and we're just tagging the high probability profit target. So there was a nice little short-term trend move to the downside. And I think I went over the Raptor already. The Raptor is a blend of the three birds. It incorporates elements of the hawk, the falcon, and the eagle into one. The Raptor actually did produce a sell signal here just as the band was turning over and caught that nice little move lower. And then we hit this sideways action and we produced another sell signal just here after the breakout. Same idea though, we're essentially for the most part looking for confluence. We're looking for red bars, red filter, bearish band. There are some variations on it, but that's the gist of it. That's just a real quick overview for you. Good to hear. Andy says, I'm new to Trade Manager and I can confirm that it's a fantastic tool, well worth the money spent on it. This Trade Manager tool really does allow you to trade just like Wall Street. It automates most of the trading process. Like I said, you've got 16 different stop strategies to choose from. I'll take a trade here in a moment and you can see how the market will automatically roll your stops for you. Let's see if I'm getting a half decent signal somewhere. I'd hate to take a losing trade just to demonstrate something to you. Oh, here's a macro pullback signal. Why don't we try this one? Okay, so here's a macro pullback. Oh, first let me flip my stop strategy over. No, it's not going to flip. Okay, still chasing this macro pullback. It might turn into a 4-arrow consolidation. So you can see the problem here is I want to give this trade a chance, right? I don't want to strangle it right here. What if it's not done retracing? So I don't know. Let's try to risk it up here and let's go with a stop strategy that will move the bars to the other side. There we go. Let's use that. Okay, so now what you're going to see, oh, did you see the stop get grabbed from here and brought down here? I'm going to disable that and just roll it up a little bit until we can see this swing, and then I'm going to enable the stop strategy and I'll show you, well, hopefully show you, how the Trade Manager will automatically roll your stops down. Oh, come on, you guys, be nice. I'm trying to make a point here. Now we're into yellow bars. Okay, still 1, 2, 3. So possibility of a 4-arrow consolidation. Possibility now of a green bar sell. I was just trying to demonstrate something here. We'll hold this up here until the market turns. Oh, I know. I'll go with the bar high-low. That's a more aggressive strategy. Oh, you're not even going to give me one bar? So this is my stop strategy. I've gone with the bar high-low, which is the most aggressive stop strategy we have. And I'm hoping that the bar is going to tick lower here so that I can show you how it automatically rolls the stops. No, it's not going to allow me to do that. Oh, maybe. Here we go. There we go. Okay, so I'm going to enable the stop strategy. Now as this, well, if this bar closes higher, it will automatically pull my stop down to the stop strategy, but hopefully it will close lower for, okay, you see how Trade Manager grabbed my stop strategy, rolled it down, and, well, we're not going to go any lower. If we did go lower, it would continue to roll my stop for me. That was the point I was trying to make. Yeah, they're not going to do that today. But that's the bad example. I'll see if I can find you another example. So where these blue dots are, that is how my stop strategy or the Trade Manager would have rolled my stops for me. Usually it's a little bit more entertaining than that. Andy's asking, oh, this good question from Andy. Do you fluctuate your risk exposure depending on what trade setups come your way? Yes. So for instance, right now we're kind of flirting with a possible trend change signal here to the upside on the Falcon, right? Our trend line has changed color. We have the up portion, we have the down portion, we might get the up portion. But today has been a very dramatic downtrend, hasn't it? So I might choose to dial back my risk amount. That's an easy way to control your risk exposure on trades that you think might not be or have as high a probability. So I'm getting the warning dot. I don't have the triangle hash mark yet. The other thing I'm going to do, okay, so here's my second warning dot. I know that it's going to print right here. I'm going to try to risk the trade all the way down there. So I'm going to go with the swing low strategy. And now this will hold me in. So I still get to participate in the trade even though I'm risking less, even though it's in a downtrend and I'm thinking, okay, you see we hit our break-even stop on the Trade Manager. Trade Manager automatically rolls my stop now to break even, and hopefully it'll trend a little higher. There we go, and we hit our profit objective. So yes, you know, if I get a first micro-macro cross signal on the hawk and it's against a very strong downtrend, first micro-macro cross signal was right here. Another good example of why you don't want to strangle your trade, right? This is here. If I strangled my trade like that, in and out, and I have my loss. But if I give myself a reasonable stop, you know, ideally all the way down there, then once again I give the trade a chance to hit my profit objective. But because this is a counter trend signal, even though it's a high probability signal, I would probably have dialed down my risk amount on the hawk also. So yes, the probabilities factor in huge to when I take a trade. I take every step I can to try to, well, first off, ensure that I have a successful trade, and secondly, to give myself the best chance of success. And I do that by running profit targets, by running deeper stops, and by controlling my risk exposure. So yes, a very good question, Andy. Okay, Sam is asking, can you define short-term? When I was talking about the short-term signals here on the hawk, are they 1 minute? No. The bar style that you see here, these are unique to Indicator Warehouse. I should have mentioned this before. These are mean Renko bars. They're not regular Renko bars, and they're not candlesticks. They kind of incorporate the best elements of both. Now, I'll tell you folks, these bars are good. I was a dyed-in-the-wool 5-minute chart trader. I cut my teeth on 5-minute charts, and that's all I traded, 5-minute charts. And when Adam came to me and he said, Eric, you got to use the mean Renko bars. You got to try these. I was reluctant. I really was. But then I hosted the room, so I had to use the mean Renko bars. And I'll tell you, at the end of the week, I would not go back to a 5-minute chart. There is so much information in these mean Renkos. So the Renko bar builds according to a range. So you can see this one is set at a 6-tick mean Renko. What that means is that when the bar trades 6 ticks higher or lower, it will form the bar. It's actually a terrible name for these bars. They sound like they're very angry. So whether it takes a minute to form the bar or whether it takes an hour to form the bar, it will still be a single bar. So that's why you see the time scale down here. It's not like a normal time scale. Yes, most of these bars were forming in less than a minute this morning, the way the market was unfolding. But there have been periods, especially in the after hours session, very active day today, where, let's see, if we go here to the Asian session, things slow down a little bit. So you see here this bar formed at 16:55, and the next bar didn't form until 17:11. So it took 15 minutes for this next bar to form. The tools respond to certain market conditions. And there's a lot more going on than what you see here on the surface. When these were designed, we just gave you enough that you could make decisions without cluttering the chart with too much information. There's actually about a half a dozen processes going on behind the scenes on each of these charts, requirements that have to be met before the chart will print a signal, before the bird will print a signal. Listen, folks, I just got a Skype from Adam. It's his birthday this week. Actually, yesterday was his birthday. So he's running a special at the website. So you can go to indicatorwarehouse.com. And you guys all know that address. And if you choose to purchase anything, the discount code 49 years, all caps, just like this, will then click apply. So in the promo code, if you choose to purchase something, in the promo code, enter 49 years, click apply, and that's a 20% discount. Wow. And that would be off anything. So whether it's the new Geiger counter, or we also have the trade forecaster here. This is also an add-on tool. It will work on any chart. It attempts to predict the current market environment. So it says currently we're in scalp mode. Yeah, that seems about right. The market not really committing one way or the other for about another 10 minutes, and then we're going to go into swing mode. So hopefully things will loosen up a little bit. We also have the day ranger up here, which I have not touched on yet. The day ranger, well, it gives you the daily market range. You can see that today we're actually trading above the market range. We've already got 247 ticks in, and the average 5-day range was 225. So this market really starting to expand, really starting to unwind. What does that tell you? Well, that tells me that I can perhaps run a larger profit objective, perhaps have a runner in play, knowing that the market range is expanding. So it also enables me maybe to set profit targets or stop losses. Let's say I want to trade, go for 20% of the daily range as a profit objective. Well, if I know the daily range is around 250 ticks, well then I can go with a $50 or 50 tick target. I'm sure we would have hit one of those today. Let's see. 50 tick target. First micro macro cross signal right here. Was that enough? Nope, not quite. Came up a little short, but it still would have had some profit here. Would have been stopped out right about there somewhere. 50 ticks might be a touch aggressive on the hawk. Okay, getting a possible red bar buy. Ron is asking, do you run this room daily? I do. The Wednesday room is our open house room. It's our public room. Monday, Tuesday, Thursday, Friday are for DTS owners. Oops, sorry. I pushed the wrong button there. Here we go. Let's get that back. And I should mention, folks, that the trade room it's a trade room, but it's also a training room. Sometimes I'll do just like today, where we'll focus on setups and say, okay, you know, which setup is better. We'll also try to highlight good trades, of course. But like here, for instance, here's a red bar buy. This is one of the few signals that we can trade counter trend. And it is a weaker signal. So Andy was asking about, you know, how do I handle a weaker signal? Well, I'll dial down the risk amount for starters. Oh, and maybe we'll throw a runner on this one. Why not? Let's do a runner. So let's just see where that goes, if anywhere. See, so Walter, this is the kind of trade that you could take with a smaller account. You could afford a trade like this. If it didn't work out, you wouldn't ruin yourself. I'm going to hopefully show you here in a moment how you can manage this trade. Like I said, the red bar buy, oh, it looks like it's going to work out. The red bar buy tends to be a signal that develops near the end of a trend, which is why I was setting up to sell it. If we get this test of the extreme now and the failure, then can be fairly confident the market's going to fold over and head lower again. No, look at that red bar buy, it had some strength to it. Okay, well, we'll just leave that alone for now then. There's a few more questions here. Sam is asking, does the order management, money management thingy you're using come with each of the birds, or is it separate? It is separate, but I know there's package deals where you can purchase the trade manager along with the tools. Oh, here, just for giggles and grins, let's go over here to crude oil market, which is almost near inventory. Look at this. We've stayed within our range. I'm going to go with a very conservative chandelier strategy, and I'm going to run my OCO orders. Trade Manager does allow for OCOs, and I'm going to place one above, one below. So essentially what I've done is I bracketed the range of our support and resistance suite. Now with the OCO orders, you need to be aware because they are live the moment you put them on your chart. And this is a very aggressive strategy, folks, in crude oil. Once this inventory report hits the floor in about another 30 seconds, the bars could go crazy here. I have my stop enabled, good. I don't have a profit target on this trade, so I'm hoping there will not be a fake breakout. Right now, you're getting a trend line signal to the upside, a trend change signal here on the Falcon. Hasn't printed yet, but I could place an order right there. It's surprising sometimes how correct the DTS signal is, even in the face of a report. We'll see whether or not it actually prints to the upside here. There they go. Look at that. Oh, hit the break even. Get going. Get going. Come on, don't look back now. Get up there. Get up there. There we go. There we go. Okay, so I've got a fairly conservative stop strategy working right now. If this gets up a little higher, I'll probably go with something a little bit more aggressive like parabolics. Oh, parabolics are right there. Come on, get up there. Get up there. Give me one more swing, and then I'll switch to the parabolics. Get up there, you scoundrels. Come on. So this will make everybody real happy. The gas companies will have a good excuse now to raise prices at the pump again. Yeah, like they need an excuse. Come on, take out that high. Maybe I'm going to go with the bar high low. It's a little bit more aggressive still. There we go. That's all I'm going to give them. Crude oil could go much higher from here, but it's not beyond crude to give me a fake breakout either. Get up there. Here, give it a little push with the mouse. Get up there. Come on, get up there. Go. Get up there. All right, while we're waiting for the crude oil trade, there's a few more questions here from you. Thank you for asking questions. Tom is asking, are there other differences between the mean Renko and the regular Renko besides the wicks and tails? Yes, there are. Some of them are kind of sophisticated. The programmer explained them to me and my eyes kind of glazed over. It has to do with how the bar builds. And the chief advantage to the mean Renko bars is that they have this smoothing effect, which makes it very good for indicators. That the indicators tend to respond much better with the mean Renko bars. You end up with more reliable signals. Now that doesn't matter whether you're using DTS. You can actually buy the mean Renko bars separate. And let's say you want to throw them on your Bollinger Bands or RSI or whatever you like to use, it will plot your indicator better. It will be more responsive. But yes, there are, that's why I say I wish they had named them something else, because they're not really Renko bars. They're a range style bar to be sure. They only build at certain ranges, but I don't know. I'm not in charge of naming stuff. I would have given it a sexy name like Power Bars or something like that. Oh no, Power Bars already uses that snack. Sam's asking, do they work on Forex too? Yes, absolutely they do, Sam. And hold on one second here. Let's see if I can load, if I got my Forex feed. No, I don't. But I'll throw a Euro on here. I'll throw a 6E up and you can see what it looks like. Michelle is asking, hi Eric, could you please draw the test of the extreme on the Falcon from the NASDAQ? Sure. Okay, so I guess you're referring to this latest move. Yeah, the market is, okay, here's what Michelle is asking. What we tend to look for at reversal points are what I call a test of the extreme. And a test of the extreme is one of these things where the market goes up, and now you get the sellers, in this case the sellers, trying to fight the market back, but it fails. It fails, comes up short, and then goes the other direction. This is called a test of the extreme being right down here. And so Michelle is saying, where's the test of the extreme right now? Well, the market's been moving so darn fast right now that it's really kind of hard to find the test of the extreme. We don't normally see these V bottoms. Sorry, messing around here. We don't normally see these V-style bottoms, but that's more or less what we have. The test actually on the Falcon came right here. It would have been difficult to recognize, but we did get the trend change signal. That's how I know that this was the test of the extreme. Likewise, this is the test of the extreme to the upside because I printed a trend change signal, even though it's very, very slight. Now you can also take the point of view that this is potentially a larger test of the extreme. Right? If this fails, goes back up now and prints a buy signal, a trend change signal to the upside, well then this will have been a much larger test of the extreme. So we have our little ones, but we also got this, potentially, this great big one building. I know, sometimes it can be a little bit difficult to spot. The hawk would have been a little bit more responsive in that area. You see here's that comparable move that we saw on the Falcon. A little more of a test here on the hawk. Slightly more. Notice the Falcon printed a signal here, the hawk did not. That's a little unusual. Usually the hawk will get on these things. And then here we have a very quick test of the extreme on the hawk. The market heads lower, we get our first micro-macro cross. But here too you can see maybe this is all just one big test of the extreme. Today a little bit more confusing than usual. The market's just been moving so fast. Jay is asking, which system is ideal for day trading 2 to 3 trades a day, 5 to 20 ticks on oil? Well, all of them really. It depends on the market, right? If the market's not trending, well then your Eagle Trend Trader isn't going to generate very many signals for you. So here's the Eagle Trend Trader on crude oil. And you can see we had a with trend signal here. We had a red bar buy here, very high probability signal. Another red bar buy just off crude oil's open, a with trend signal right here, and now we're possibly working on another red bar buy. So crude oil had some direction to it today, finally, after flopping around for a few hours. So you can see our trade forecaster saying that crude oil is going to be in trend mode for another 100 minutes, another better part of an hour and a half. So that tells me that I can be on the lookout for minor pullbacks and hopefully a little bit more follow through. But, you know, not all days are like that. Well, this was yesterday. Yesterday was a good day. But here was the day before on the Eagle, and you really didn't print any signals. Right? There was nothing really tradable here. There was this signal, which failed. What? The signals can fail? Yes, I'm sorry to tell you, as good as DTS is, sometimes the signals can fail. That's why we try to restrict our risk and try to do things to protect ourselves. Here was the day before, again, a rather quiet day for crude, but you generated at least one good signal. We do have high probability targets for each of the tools as well. So honestly, to generate 2 or 3 signals, all the tools will do that pretty much for you. Obviously, a tool like the Hawk, being a scalping tool, being more focused on the short term, will generate more signals. And then you got your Falcon, which looks for midterm moves. So if the market, again, it depends on the market condition. If the market is if the environment, again, this goes back to the whole premise of why these tools were developed. If the environment that crude is for that day is a scalping environment, well, then you're only going to get scalping signals. That's why we have 3 tools. I know they're expensive. You can see that they work, but people are always wanting to buy just one. And you go back, that's fine. You can just buy one. Just be aware that if you buy the Eagle Trend Trader, not every day is going to be a trending day. If you buy the Falcon Swing Trader, not every day is going to be a swing trading day. And if you get the Hawk Scalper, well, almost every day is a scalping day, but sometimes you may miss out on larger moves because you don't have the Eagle telling you that there's a bigger move coming, and so on. So that's, again, why the premise of the whole thing, why the 3 tools were developed. Bernie is asking, can you buy those bars on the site? Yes, Bernie, absolutely, you can. And remember, if you use that code 49 years, 49 YRS, all capitals, for this week, you will get 20% off. Good question here from Bob. And I do appreciate your questions. It does make the time go a little faster when the market's going sideways like this. Bob asks, seems like following the roadmap of quality trades that the indicators present would keep one from over trading. Would you go over the support and resistance trading on the NASDAQ? Absolutely, Bob. And you are absolutely correct. If you focus on the high probability signals, let's say, honestly, you can make a living on the Hawk trading first micro macro cross signals. There's one. Where's another one? Well, here's one, but that one should have reached its profit objective. It got awfully close. Let's see. Oops. Let's do this. Yeah, just hit the profit target. Like I said, that happens a lot. You hit the profit target and then the market reverses. Here's another one. Here's another one. Here's one that failed. Oh, sorry, that's not a first micro macro cross. My mistake. Here's a first micro macro cross. I know you're saying, wait a minute, Eric, the trend lines didn't cross there. No, but the premise of the first micro macro cross is that everything goes out of sync and then everything comes back into sync. So the market is out of sync, telling us there's confusion, there's no confluence, traders don't know what they're doing, and then all of a sudden, oh, I know, let's sell. So the market comes into sync, everything turns red, and there's our signal, even though technically the trend lines did not cross. But you can see there's just over the span here of the last half hour or so, we have 1, 2, 3, 4, 5 signals. 5 first micro macro cross signals. Now, admittedly, that is a little unusual, but it's that kind of day. And even if you took just $50 on each, there's a $250 session off 5 very high probability trades. And if your account allowed that you could, take a little bit more, there would be a $500 day. And that's how it's done, folks. It's not chasing around all the signals. It's focusing on the high probability trades, and Bob's absolutely right, not over trading. Sometimes the most difficult thing, well, maybe for a room moderator, might not be so difficult for you guys, but when I've got people in the room and the market's doing this, there's nothing tradable here. The hawk is telling me, all these yellow bars, look at the filter, everything is a wash here. There is no tradable trade here. So a lot of times I say, well, here's the range. Let's wait for it to get outside that range. Or if it prints a signal where I actually have a chance to profit, well, like this one here, where I have a chance to profit before we encounter the bottom end of the trading range, I might take a stab at that. First micro macro cross, there's a little bit of room here, I might take a poke at it. But otherwise, I'm waiting until we get out and we see this type of scenario, or we get to the downside and we get that kind of reaction. Because otherwise, you're just chasing your tail. A friend of mine liked to call this type of thing the abattoir. And for those of you who are rusty on your French, abattoir means slaughterhouse. Here's another high probability signal on the hawk, which had very nice follow through, this macro pullback signal. Macro pullback signal, easy to identify because everything is in sync except the micro line. The micro line goes out of sync. Now, Bob was also asking about the support and resistance suite. The support and resistance suite is an assortment of 21 support and resistance lines. No, these are not pivot points. No, these are not Fibonacci retracements. If they happen to coincide with one, it is a coincidence. I'm very proud of these lines. These took a lot of math to develop these lines. And for the most part, they tend to be fairly accurate. Omar El-Tuki, the fellow who likes to trade the Forex market with DTS, will use them as profit objectives. And you can see they worked pretty well as profit targets today. The gold line is the median line. That pretty much just tells you you're in the middle of your assortment. So I have 10 lines below, 10 lines above. The blue line is primary support. The blue line above is primary resistance. These 3 lines through here tend to be the strongest. Once the market breaks down through there, we do tend to see the market move 2 zones, which is exactly what happened here. We generated a sell signal below the primary support, and the market moved 2 full zones. So this is how Omar likes to use it. He likes to use it for profit targets. So he would have had a profit target down here, and he would have been well rewarded. He also likes to use them as places to roll his stops. So as the market progresses lower, he would, roll his stops below the support and resistance lines. So had he not taken profit here, he would have rolled his stop down here, and he probably would have been stopped out somewhere around here. And now you can see the lines are wavering a little bit, but this is essentially showing us that there's a little bit of a bounce coming off of here. So the market is waffling. It traded through, traded back above, traded through, and is coming back above. That's telling me that there is some support in this zone. Even though it's fudged the line a little bit, I know there's something in that zone. Oh, then it broke down, headed a little lower, and now we're retesting it to the upside. So when you're trading the support and resistance lines, a lot of times you're going to be looking for this whole test retest thing that we've been talking about. right? So, oh, well, here's an example right here. You get above, you retest, you come back. You get below, you retest, you look for it to go lower. Only twice have I seen the market run out of support and resistance lines. Once in the NASDAQ, once in crude oil, where the market blew through all 21 lines. Well, I should actually just say the 11 lines, because I think it started around the middle and blew through the bottom end, or the top end, whatever it was. But normally the 21 lines will give you lots of support and resistance levels to use as profit targets or as ways to gauge your trade. You see, here we had a trend change signal, and it looked like we were getting a little bit of support off of the line. So that can add a little bit of confidence to your trade, and look at where we traded to. Traded right to the next line, and oh, look at that. Big surprise. Now we're getting some support. Or, pardon me, resistance. Yeah, the Geiger counter had a little bit of a bullish stretch through there, no doubt, when we were seeing this little bit of a rally. Tom is asking, can you use the Equivolume and Minrenko on the same bars, making them fatter or thinner? I haven't tried it. I don't think that's an option available to me. Let me see here. Yeah, I can't. I would say no, but that's just a gut call. I haven't tried it. If you're, yeah, I don't know. It's an interesting question, Tom, but no, I would probably say no. I get the logic behind the Equivolume bars, and they're kind of cool, but honestly, all I really need to know is the price action. Like, for instance, well, here, let's go with the hawk. I will know when the hawk will fail. How do I know? Well, I'm going to see a test of the extreme. I'm going to see a test of the extreme, then I'm going to see the market turn over, and I'll start looking for my first micro-macro cross to the downside. Here was a test of the extreme lower. The market failed, came back with a macro pullback signal. So long as I can see the price action, and I can see the support and resistance build, and I can see where the buyers and sellers are digging in. That's all a test of the extreme shows you, by the way. It shows you, okay, rally up on the part of the buyers. Here come the sellers, because, hey, obviously, folks, we had a huge move lower today. The sellers are not going to walk away from this market. So big rally up. Sellers are trying to force the market down. Well, somewhere through here, the buyers are going to step in and try to push the market again. If I generate a buy signal off of my tool, I will buy. If, however, I don't get a buy signal, and let's say I just see a little bit of price action, and all of a sudden the sellers come back, well, who has control of the market now? The sellers, obviously. So now I'll be looking for a sell signal. So long as I can read the price action, the volume really doesn't matter that much to me. I know some people like to run a volume grid underneath their chart so that they can see the flow of volume, and that's fine. Volume is a great tool, great indicator. But my criteria for adding anything to your chart is, does it help you make a decision? I know a fellow, for instance, he loves Bollinger Bands. You can put Bollinger Bands on your DTS. Go ahead, throw the Bollinger Bands on there. If this helps you make a trading decision, fantastic, use it. If it doesn't, get rid of it. Mike Filigera, he loves fast stochastics. I don't know why, but he does. So where's stochastics? Stochastics fast. This helps him make a trading decision. This does nothing for me. Do you need to have fast stochastics on your chart? No, absolutely not. Everything you need to make a trading decision is right here. Sometimes less is more. Sometimes just having the time and the clarity to look at a chart and say, oh, that looks a little bit like a test of the extreme. Oh, look at this. I'm getting a trend change signal. Maybe I'll buy. Okay. Maybe, the market is in a downtrend today. Maybe I'll protect myself a little bit. I'll roll my risk down. I'll try to run a deeper stop. Maybe I'll run it to the swing here in the trend line. That works. Boom, 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 in and out with your profit. Thank you very much. Or you have a runner in play or whatever. But trading is so much more than signal generation. I know that's where everybody gets caught. That's everybody's favorite subject. But believe me when I say that signal generation is only part of the equation. Trading is like a stool that has 3 legs. Without all 3 legs, the stool will fall down. So you need signal generation, you need trade management, and you need money management. And that's why the DTS system was developed. It has all 3. It has signal generation, it has trade management, and it has money management. I've seen a lot of trading systems, but I have never seen anything as even remotely as strong as DTS. And I'm not just saying that. I've had an opportunity to use stuff, and this is pretty powerful stuff. Bernie asks, what time does crude oil open? It opens at 6 a.m. Pacific, 9 a.m. Eastern. Oh, I see. Tom says he bought the dynamic equivolume and was wondering if they would work with the mean Renko. You know what, Tom? If they, again, I'm guessing they don't, but if they don't, we can always put you in touch with the programmer and he can maybe tweak them a little bit to make it work. I'm not sure. It's a pretty smart fella, the programmer. Adam likes to say, and this is true, he actually designs missile guidance systems. No joke. The guy who's responsible for a lot of the programming on the DTS system designs missile guidance systems. So you know this programming is tight because there's not a lot of room for a missile to fail in the programming. Bernie is asking, can you slow down the signals by using higher tick values and still get good signals? Yes, we do have recommended brick sizes. A lot of times if the market is moving really fast, you're going to generate signals on different tools. Like for instance, well, we got signals across the board this morning, but if you're worried about missing out on a move, we actually did get a rule of 3 signal here on the Eagle. I was waiting for a little bit of a retest. We did get a signal on the Hawk though. Hawk and Falcon did give us signals early out. But to answer your question, yes, you can incorporate a larger brick size. We normally recommend the default brick sizes for 99% of the markets you're trading. Certainly instruments that trade at $10 a tick or less, we recommend the 6-tick Hawk, 8-tick Falcon, 12-tick Eagle, and 8-tick Raptor. On instruments that trade at $12.50 a tick or more, we recommend a 4-4-6 setting. So 4-tick hawk, 4-tick falcon, 6-tick eagle. And the easy way to remember that is the telephone prefix for Moose Jaw, Saskatchewan. There you go. Now you'll never forget. But yeah, you can dial up the brick size, or you can make it smaller. But we feel that the tools have been optimized for these particular sizes. Yeah, Tom's asking me if I could show the equivolume around crude open. Oh, crude announcement and the NQ open. Okay, well, I'm sorry, I can't do the equivolume thing, but let's do the crude announcement. So I'm just looking at the Falcon here. We'll get similar signals on the Eagle and the Hawk. So the market was going sideways. Crude inventory comes out at 7:30 Pacific, and we were getting a trend change signal that I mentioned. And this is true that very often the Falcon or the other tools will generate the signal going into inventory. Even though I had my trade up here, I could have taken a trade right here, set it up to take it off of the trend change signal on the Falcon. Would have gotten me in a little earlier. I probably would have still tried to risk the trade down there. But boom, would have gone up, hit my profit objective. Actually went a little bit further, didn't it? Oh, not much further. Hit the high probability target, floundered for a little bit, and then started to reverse. There was, it's always a debate whether you should have a runner in play or whether you should take profit on target. A lot of times I feel that there's more advantage to going all in, all out. Even though you're going to run into days like today on the NASDAQ where the market runs away on you. Let's go back to the open, where you get these types of moves. These types of moves tend to occur maybe once a month. The rest of the time, you're probably going to be better off just going all in, all out. So here was the NASDAQ at the open, and you see it looks actually very similar to crude. I've been hypothesizing lately that the NASDAQ and crude oil are actually moving together. I don't know if there really is a relationship there, but they do sure seem to move together of late. So here into the open, again, we have the trend change signal. So the trend line changes color. We get our characteristic up, down, up pattern. Here's the signal that prints. I probably would have risked the trade down to here. And boom, hits the high probability profit target, and all of a sudden the market reverses. A few moments later, we get an early trend change signal. Now, the only difference between the early trend change signal and the regular trend change signal is the early trend change signal generates just as the trend line flips, but we still have this characteristic reversal pattern, this down, up, down. Here we had the up, down, up. All right, but still the test of the extreme, the failure. The early trend change signal is not as high a probability, but the nice thing is that you can always cover it above the swing high or low because it is an early signal. So if the market brings me in now and reverses and heads through the high, well then I know I'm definitely on the wrong side of the trade, right? So that's the good thing about the early trend change signal. So a few moments later, we actually got a proper trend change signal. So here's the move that changes the trend line color. The buyers were only able to muster a single bar against the move, and then here come the sellers. And they were full on serious about selling. And boom, away we go. So within the span of a few minutes after the open, you could have been up $300 without too much sweat on 3 relatively high probability trades. It's all about probabilities. Look at this retracement. What a crazy day today. Don't be surprised if they start to stumble and stagger and head a little bit lower. I think this could be some profit taking that we see going on here. Jay is asking, could you go over the Raptor signals on crude oil? One moment, Jay. I will load up crude oil on the Raptor. Oh, too bad. Joe says he just missed an entry signal on crude oil. It ran away on him. I hate it when that happens. All right, so here's crude oil on the Raptor. And the Raptor, or crude oil, opened at 6 a.m. So right about here is the open. One of the best signals on the Raptor is this double pullback. I really try to hold out for a double pullback. And then when the market comes out from this double pullback and generates a buy signal, that tends to be a high probability signal. So we had a nice little progression out of that. Here was the inventory. Now, this was a buy signal. However, a lot of times I like to see the buy signals at least come off of the soft edge of the band. Let's see if I can find you an example. Something like this. This wasn't really a trend change signal because the band never changed. But notice how when the signal comes off of the band, again, it tends to have a little better follow through than the signal that forms away from the band. Now we're back into the band, and there's the double pullback. So here was the inventory report, the failure. This is a signal I've been playing with. I haven't done very much with. I've mentioned it in the room from time to time. Right now I'm calling it a soft, in this case it would be a soft edge sell. Sometimes when the market on the Raptor encounters the soft edge, and again I'm researching this one, folks, so that I can tell you whether it's a worthwhile trade to add to your arsenal. But when the Raptor encounters the soft edge, a lot of times will generate a sell signal. You see it happened here. It happened here. And the premise is that it's going to retreat to the hard edge. Now, the wider the band, of course, the more attractive this trade would be. You don't want to take it necessarily if the band is fairly narrow. But here was a soft edge sell that had good follow through. Then the market turned a little bit quickly here. Unfortunately, the band was just turning over. You might have tried to sell this on the test to the extreme. This is one that's honestly easier to see in hindsight. But we're near the lows. I might have thrown in a sell order just below the low here, covered above the high. It's essentially like a short-term trading range. Remember what I was saying. Here come the buyers come up, sellers knock them down. Here come the buyers, sellers knock them down. Well, if I place an order below here, the buyers have to protect this area, right? This is where the buyers have drawn the line in the sand. They said, we're defending these lows here. We're buying in here. So the buyers have to buy. So if I place my order below here, then if the buyers are not strong, the sellers will take over, they'll fill my short order, and the market will head lower. If the buyers are strong, then my order should never be filled, and the market will head higher. So this is what I look for. I look for these areas where the buyers and sellers have to make a decision. It's kind of like a shoving match. right? It happened here too. Sellers come down, buyers say, oh no you don't. Sellers say, oh yes we do. Buyers say, oh no you don't. And here comes a buy signal. The market rallies. Sellers say, no, that's as high as you're going to go. Buyers say, no, this is as low as you're going to go. Sellers knock them down early. Buyers have to come back or they lose the market. Well, they lost the market. So you see, again, this is why I like the mean Renko bars, because it tells a story. It lets you read the charts very much like reading a book. And it's not difficult to do once you get the hang of it. And we do this in the room all the time, right? We're looking for these areas. Here was a trend change signal that didn't trip. This would actually be our first trend change signal on the Raptor. So I would anticipate here on crude oil, if it has much left in it today, we're going to get one of these. It's going to come out. We're going to get a double pullback into the hard edge. And it might come out from there and generate a sell signal. So that would be a high probability trade if we get that double pullback to the hard edge, which is essentially this same scenario right here. This was a double pullback. The Raptor tends to be a little bit more conservative on many of the signals because it is a blending of the different tools. It has some of the advantages of each. And of course I'd shoot a trend line across the top here. And I'd probably shoot a trend line across the bottom. So it looks like we have a little bit of a trading channel like that. And it looks like you could probably draw a trend line like this. And we'll see whether or not it honors a trend line here. That would make it very much like a bear flag, wouldn't it? Kind of suggests that if this formation holds, we don't have that swing point yet, but if this formation holds, then yeah, it's starting to look a little bit more bearish. So there was the Raptor on crude oil. Richard's asking, Eric, I noticed that with the 446 brick size, the Falcon trend line and the Hawk micro line are the same. Is that right? I don't know. It could be. I've never overlaid the two. Let's see. 133.53. Yeah, it looks like they are. Oh, I'm sorry. I meant somebody asked about the Forex, and I was going to show you the euro. Here's the euro on the Falcon Swing Trader. Since this is a European market, let's go to the European session. See the London Open. Yeah, that's probably more coincidental than anything, Richard. They're different trend lines, but yeah, very observant. I never even noticed that they were printing the same value. Alrighty, so here we go. Here's the London Open. We get a trend change signal to the upside, early trend change signal down here if you were paying attention. See, we get the little down, or pardon me, up, down, up pattern. Signal prints as the trend line changes over. Then a few moments later, we get the proper trend change signal with our up, down, up pattern. Both signals profitable. Followed quickly by a trend change signal to the downside about half hour later. So same thing, you could have finished your day like that before the first hour of trading. A lot of sideways action, no real follow through on some of these signals. Oh, there was a trend change signal here, I think. Let's see if that was enough to get to your profit objective. So we're here and here. Oh, look at that. Just tags the high probability profit target and then reverses. So if you were running a break-even trigger through here, you would have been taken out on break-even. Otherwise, probably this bar right here, when the market rallied, that would have been your last chance to roll your stops up before it reverses. Generates a sell signal, a trend change signal to the downside. That one also hits our high probability target. Starts to go a little bit sideways. And yeah, there was another trend change signal to the upside. So once again, you know, oh, here's a late filter entry. I haven't touched on this one today. Very high probability signal in the Falcon. Very high probability. Almost as good as money in the bank. Really, I'm serious. Trend line does not change color. Filter does. When it comes into sync, when you generate your signal, you're almost guaranteed to hit your profit objective. I very rarely see a late filter entry signal fail. Another one of those signals, like the first micro macro cross on the Hawk, a signal that I'll take almost without exception. So let's go now to the North American session, and it looks like, oh, a lot more choppiness. Where did the North American open occur? Right down here. Nice trend change signal. See? I bet you guys can all point these out to me already. Trend line changes color, up, down, up pattern, prints a signal, away we go. So a good day in the euro today too. Very active session all the way around. Mark is asking, what is a runner and how does that compare to other strategies? Sorry, Mark, I didn't make myself clear. Right now, the Trade Manager, it allows me 3 different profit targets and a runner. So I've currently got my position set to be all in, all out. But let's say I wanted to take a third of my position, 30% of my position on target 1, 30% of my position on target 2, and then leave the rest on as a runner. Trade Manager will automatically split up my trade for me according to my preferences. So let's say, and I'm just throwing a signal in here, folks. If you're trying to mirror my trades today, don't do it. I'm just throwing a signal in. Oops, what happened there to the, oh, 200 ticks. That's a little silly. Okay, so let's say I'm going to try to enter here. I'm going to cover, well, here, we'll use the stop strategy. So you see I've got an order on 7 contracts. I'm going to take 2 contracts at target 1, 2 contracts at target 2. Well, that's only 4 contracts. So I'll still have 3 contracts on as a runner. So we'll just have a little bit of fun here. I'm on Sim, so I can show you this sort of stuff. Let's see if it actually bounces now and heads a little lower. We're a little bit late to this party. We should have taken this first micro macro cross. Angelo is asking, do you take every setup? No. I tend to favor the high probability trades. These signals here on the Hawk, these are our high probability setups. These are the ones that I focus on. So first micro macro cross, macro pullback, 4 arrow consolidation, post 4 arrow consolidation, red bar buy, green bar sell. Those are the signals that I concentrate on. So this is essentially a macro pullback signal. Normally I would risk it a little bit higher, but this is just for demonstration right now. And you can see if you focus on your high probability signals, you'll usually be all right. Here's a macro pullback. Here's a macro pullback. Here's a first micro-macro cross. All these signals, first micro-macro cross, they all have good probability of success, which is why we focus on those. And why I'm not so concerned, because people will ask, well, Eric, how come you didn't take this signal here? Well, because it didn't match my high probability signal requirements. And as I mentioned before, trading is not about taking more. Trading is not like your regular job, right? If you're on the factory line and you produce more widgets than the other guy, you make more money. Trading is not like that. You do not make more money by trading more. In fact, you could make the case you make less money by trading more. The only one who makes more money will be your broker. You make more money by trading larger size, by taking a high probability signal, leveraging yourself to an acceptable risk amount, namely 5% or less of your trading capital. And as your capital grows, you will be able to earn more. If you take just, and I mentioned this before, if you take just two $50 trades a day, forget the home run trades, two $50 trades a day, you will make $20,000 in a year trading a single contract. How would an extra $20,000 impact your lifestyle? Favorably, I would hope. Probably pay off a few credit cards, maybe buy a nice toy, get a boat, or take the family on a really nice vacation or a couple vacations. So we hit our break-even target and our first profit objective, which is our high probability profit target. So, we're in the clear. We've got a little money in the bank. We'll see if the market tails off now and hits our second profit objective. So if you take those same two $50 trades and you trade 3 contracts, that's $60,000 a year. I know a lot of people working a lot harder than taking two $50 trades a day to earn 60 grand a year. Bob is asking, can one buy the Raptor and then change to the complete system at a later date? Absolutely, Bob. You can always add on, regardless of which tool you would like to start with. Jay says the cloud gives extra confirmation on the Raptor. Yes, this is the cloud that was borrowed from the Eagle Trend Trader, and it what am I looking at here? The NASDAQ. It pretty much shows you directionality. So when the cloud is bullish, as it is now with the soft edge above the hard edge, we call this here the hard edge, we tend to look for buy signals. Here is a trend change signal, which tends to be a high probability signal on the Raptor. So the cloud just flips over. This is the first signal that generates, so we get that little hard edge bounce, generates a signal. That tends to be a higher probability signal. Bob is asking, will you show support and resistance? Well, right now I just have the support and resistance loaded on the Falcon, only because it's redundant. I could have it on all the charts, but the information does not change. So this is the ultimate support and resistance suite. Here's the ultimate support and resistance suite on crude oil. So you can see crude still kind of hovering between the primary resistance, primary support. They started the day sandwiched between the median line and the primary resistance, popped up for a little bit and came right back down into this channel. I would expect it to find primary support. Same reasoning. When it breaches the primary resistance line, I expect it to move two zones, which will bring it down here to $61 a barrel. And I might as well show you the support and resistance suite here on the euro. You can see it's currently bullish because we're within the green zone of the resistance band. And we're kind of honoring this resistance here around the 113.40 area. So we're finding a little bit of support here, possibly working on a trend change signal now. I really didn't think the buyers had it in them, but it looks like they might. Good question. Bob says, will these work around the clock? Yes, sir. Absolutely they will. And they'll work on any market that you can chart. Mike Filigera uses them to trade the stock market. Omar uses them to trade the Forex. I use them to trade futures. But yeah, any market that you can throw on there. ETFs, you can chart those. DTS will give you a signal. Look at our Geiger counter now, full on buy. Are we printing a buy signal anywhere? Oh, we have a trend. A little bit of, again, there's no confluence in the market today. We're getting a red bar buy signal here on the Eagle. You could cover it below that swing low. The market has moved a long way today, though. They got to be getting tired. Maybe dial down the risk even a little more on that. Let's see if I can get away with 0.75%. Nope, won't let me. It says, no, Eric, you got to risk at least 1%. So we'll just see how this signal develops now. I tell you, it's a crazy day today. Honestly, I would have stopped trading probably the first hour in after, hopefully we would have bagged a couple of those early signals. Now it's getting near lunch hour. Oh yeah, it is. It's almost lunch hour, so it's a crazy time in the market around lunch hour. But look at that Geiger counter, full on buy. We'll see whether or not that has any follow through. Good job. Joe says, the euro paid me today. Nicely done. Okay, we'll finish here on Mark's question. Mark asks, can you share a copy of what makes a high probability entry? Okay, Mark, if you're asking about that screenshot that I did for the, hold on a second, I'll get it back here. For the hawk, you guys can write me. I'll send you this. On the hawk, we have our high probability signals. The highest probability signal, first micro-macro cross signal. Develops after the micro and macro lines cross. Everything is green. Filter is green. Trend lines are green. Bars are green. Signal is green. Next best signal, macro pullback signal. Then we have our 4-arrow consolidation, also very high probability signal. The only signal I will take off of the yellow bar, incidentally, is the 4-arrow consolidation. Post 4-arrow consolidation signal, and then a red bar buy or green bar sell. All right, you guys, we're going to call it a day. Once again, if you would like more information about the software, please, you can use that link right there. And don't forget, Adam was offering a discount this week for his birthday. The young buck is all of 49 years old today, or yesterday. Thank you very much for your attendance today. I hope you're taking something out of this. I hope you found it at least a little bit helpful. Sorry that we couldn't do more trades. I missed the early move. Tomorrow. We'll get it tomorrow, guys. DTS owners, I will see you in the trading room tomorrow morning, bright and early. We'll talk to you then. Bye for now.